SQQQ, which reflects the triple inverse or negative 300% of the NASDAQ 100, just saw assets under management rise to an all-time high of $4.1 billion last week. This is essentially people betting against the market, and they think that the market is going to go down massively. On top of that, starting this week, there's a new ETF called BITI, and allows you to bet against or essentially short Bitcoin. And if you're just wanting to bet against Cathie Wood, you could also simply buy into the SARK fund, SARK, which is an inverse fund betting against the return of the ARK Innovation ETF. If you ever want to short the market or bet against the market in Bitcoin, this would be a much easier option than just shorting specific stocks in crypto. Just buy SQQQ, BITI, or SARK. But the question is right now a good time to short or bet against the market? Hi, my name is Dan, and I talk about stocks, options, and sometimes a little bit of life. Okay, we have a lot to talk about in this video. Ever since Bitcoin reached almost $70,000 back in November, it has fallen 70%. And now Wall Street has made it even easier to bet against Bitcoin because starting this week, there's a new ETF called BITI and allows you to bet against or essentially short Bitcoin. What that means for Bitcoin is there will be a massive impact on its price. And on top of that, this week the crypto bailout has started because Sam Bankman-Fried of FTX has just bailed out his competitors BlockFi and Voyager. Okay, so if you don't know who Sam Bankman-Fried is, or why he's so important to the story and why all these things matter so much to crypto, stick around and I plan to talk more about that in this video as well. But first, let's talk about why the market has been dropping. In the last few months, Federal Reserve has continued to raise interest rates, increasing the federal fund rate that has been impacting us consumers, prices of food, and the stock market. Essentially, we have to bring down costs by lowering demand by increasing rates. Now, whether or not increasing the federal fund rate will actually help us with prices is a different conversation for another day. But if you look at energy, for example, it made up 30% of all inflation last month, and gas prices are up 40% since Russia invaded Ukraine back in February. Food prices are still not coming down. The dollar menu at McDonald's is still $2. Okay, so Jerome Powell explained that there's three things the central bank is looking at. The first is interest rates sensitive to spending, which are durable goods and things like cars. A lot of new cars are usually purchased by taking out a loan. If you make the loan more expensive, people take out less loans and they buy less cars. That brings down demand and allows the supply side to catch up so it can stabilize the prices. The second thing they look at are asset prices. And this is because when you increase interest rates, it actually deters people from taking on more risk. This is because if money is not as cheap, you're going to borrow less money, which also means that you're going to invest less into stocks and other kinds of assets. And that's why now you see the stock market, crypto, real estate, and everything else going down. The third thing they look at are exchange rates, because when you increase the federal fund rate, we also make the dollar stronger, and that makes it so that other countries buy less of our stuff because their currency becomes less valuable. So they buy less of our stuff, and that also lowers demand. Okay, now let's talk about crypto, because what's going on out there is really, really wild. Okay, so here's what happened. Crypto FTX, which is a crypto company owned by Sam Bankman-Fried, the world's youngest billionaire, just bailed out some of his biggest crypto competitors. Sam and FTX gave BlockFi access to a $250 million revolving credit line, and Alameda, which was also founded by Sam Bankman-Fried, gave their other crypto competitor Voyager $500 million in financing. They gave him $200 million in cash and stablecoins and another 15,000 bitcoins worth roughly $300 million. So the question is, why would they do that? And here is why. There is a company called Three Arrows Capital, and they're tied to Voyager and the rest of the crypto space, and they were recently forced to liquidate some of their leveraged investments, and now they're stuck. Voyager said that they stand to lose roughly $650 million if Three Arrows Capital defaults on their loan. So Sam Bankman-Fried stepped in, acting as sort of like the Federal Reserve Bank or the central bank to save the entire crypto economy. In total, he's going to give his competitors $750 million to bail them out. Now, why again would anyone bail out their competitors? Okay, so one thing you have to know is that The entire crypto space is what's called cross-collateralized, and that means companies are borrowing and lending money from each other, so one company could borrow some money and then use that borrowed money as proof of funds to borrow even more money, which then it will lend to someone else. This process goes around and around, but because there's no regulation, eventually you get one company that takes out an outsized leverage bet that it shouldn't. It takes on a risk that it can't handle, and that's essentially what could cause the whole system to collapse. And so that's why it makes sense that FTX might want to come in and help bail out some of these companies. Because at the end of the day, it does not matter which company is left standing if the entire crypto market collapsed. The only thing people will remember then is how much money they lost with crypto. So that brings us back to, should you short Bitcoin given there is a BITI ETF right now? Or should you leverage Bitcoin with a leveraged fund, BITO? Now there's a few things you should know about BITI though. Number one, it is extremely risky. It is not meant to be something you buy and hold for long term. And that's because of reason number two. It has an extremely expensive expense ratio, which is the cost to hold an investment. BITI's expense ratio is 0.95%, and that is extremely high compared to other ETFs. For example, the Vanguard Total Index ETF, stock ticker VTI, which represents a broad stock market, has just an expense ratio of just 0.03%. BITI is actually a derivative ETF because what you're actually owning when you buy these ETFs is not the asset itself. Instead, you're owning a bet on the future price of the asset. When BITO, the leveraged fund of Bitcoin, was launched back in November of 2021, it became the most popular ETF of all time, attracting more than $1 billion into the space, and that was almost at the market peak. The market sentiment was high. People thought that Bitcoin was going to go to $100,000. Ultimately, what's important to know is that there's a way to bet on Bitcoin's future price, and now there's a way to bet against Bitcoin's future price as well. And that takes us back to the stock market. As I mentioned earlier, SQQQ, which reflects the triple inverse or negative 300% of the Nasdaq 100, saw assets under management rise to an all-time high of $4.1 billion last week. This is essentially people pouring $4.1 billion into betting against the stock market, which means they really have strong conviction the market is going to continue to go down. And really what that tells us is a lot of people are not just betting that the Nasdaq is going to go down, they're basically betting that Nasdaq is going to go down massively, and they're super shorting the market. It shows you that sentiment in the stock market is overwhelmingly bearish right now, and understandably so. Last week the Nasdaq was down 33+%. Okay, so should you short the market and should you short Bitcoin? Well, the answer in short is I don't know. I can't make any certain predictions, and the market could fall another 10 to 20%, and Bitcoin could fall under $10,000, which means that then you would make massive amounts of money. One thing before you start shorting the market and start shorting Bitcoin, have you also considered the possibility that a lot could be priced in when you get the Nasdaq already down 33+%? Generally speaking, when prices of stocks go down, it actually becomes safer to invest in it because a lot of the negative sentiment has already been priced in. History has shown us so many times where the market just does the complete opposite of what everybody else is betting on. And let's not forget a number of catalysts that could also turn market sentiment very quickly. For example, if the Russia-Ukraine war came to some conclusion, or the inflation rate finally makes some kind of U-turn. So all that to say, be extremely careful about betting against the stock market right now. And while I'm not bullish on the market myself, given everything that's going on, I personally wouldn't short the market either. Okay guys, I hope you enjoyed that video. If you like this kind of content, if you want us to make more videos like this, make sure you hit the like button and subscribe. Thanks so much for watching, and we'll see you guys around in the next video.